Good evening, everyone. This is James coming to you from Dividend Stock Talk. It is Tuesday, 9 p.m., May 9th, 2017. Today, we're going to talk about the dividend stocks that we're going to be trading this week. You know how I love doing dividends with options. And today's Tuesday, so basically, we have 3 days left. So let's see how much money we can make this week with just 3 days. Now, what we basically do here is we invest in dividend stocks only. Only because, worst case scenario, I want to get some kind of income. So if the stock market goes down, I'm still getting some income. How can I say that? Well, only stocks I invest in are those that have been paying the dividend and increasing their dividends every year for a minimum of 25 years. That's right, even in '08, when everything else was down, these companies were increasing their dividend payments to their investors. Those are the only companies I invest in, so thankfully, I haven't had that problem yet. So let's keep the flow rolling and see what we're going to do this week and see how much money we can make this week. All right, so let's just jump in, take a look at our accounts and see where we are and where we're going to go. All right, let's take a look at this one here first. Don't panic about the overall profit year to date. Things have gone down, but we're not going to sell because we're going to collect the dividend again. And I'm going to briefly go over each stock that we're having just for those who have not been paying attention or have just recently joined us. Now, we only have 4 accounts in this position, and 4 stocks in this account. Now, the reason for that is we're doing dividends on steroids. It's where we buy the stock 10 days before the EX date. We catch the run up, get our little profit, jump out to the next one. However, we had 3 of them that we're holding a little bit longer than we want to. Let's go over them real quick and see what we're looking at. Let's change this back to normal standard chart. Now, first one we want to look at is BMO. Yeah, that's Bank of Montreal, isn't it? Bank of Montreal. There we go. Okay, Bank of Montreal started the year off in the $63 trading range. It traded in that area for about 6 or 7 months. Right around the election time, it went up, just like everything. You got to find pivotal dates. Now, '08 is a pivotal date for the whole year because everything was down. '08, excuse me, November 8th, which was the election of 2016. Now, it was the very first time a non-political candidate actually became president, and the stock market just went crazy. So Bank of Montreal was at $63 trading range, and it jumped from 63 up to the 74 area. That's a $10, $11 move, and it's been trading that way for the past 6 months. Recently, she just dropped down to the $69 area, and we happen to have gotten BMO. Let's open this up real quick. At 74.10, she's at 69.72, so we're a little bit down, 2,200 to be exact. We did collect the dividends on it about 2 weeks ago, so we're going to hold on to it and see where she's going to go next. So let's quickly take a look at the seasonality, find out an idea of where she usually goes this time of year. This time of year is not very great for bankers because of some strange reason. Don't know, don't really care. I just want to make sure this company continues to pay their dividends. As you can see in the seasonality, I should have been out of this 2 weeks ago, but we didn't. So we have to hold this for a little while longer until she hits that 72, right here, see that? 72.12 limit. Okay, once she hits the 72.12 limit, we're going to jump out and then move on to the next stock. But until then, we're going to hold on to it, maybe collect another dividend, another 90 days. All right, that's that. DFS is next on the list, so let's quickly take a look at DFS. DFS, and see how DFS is looking. Now, DFS opened up the year around 57. She traded for 6 months in the 56, 57 area, and another one, just like the last company. And at the election time on November 8th, this thing goes from 56 all the way up to 70. Now that's a $14 move. That's a nice move. She trades in the $70 area for about 4 or 5 months. She drops down, and she's currently at $60. And where are we with DFS? DFS, we got into DFS 424, which is 3 weeks ago. Got at 67.10, 67.16. So we're looking for quite a while if this thing can go back up to 67.16. But we'll collect dividends, I believe, in a couple of days on this one. Where are we now? So we got in at the 24th of last month. April the 24th. Yeah, we should be collecting dividends this week. Okay. Should be collecting dividends this week on DFS, and then we'll reset the price to jump on out and hit our profit. Okay, M, which is Macy's. Everybody knows Macy's. Now, Macy's is an interesting character. She opened up the year at 37, quickly dropped down to 31, traded the 31 to 35 area for about 6 or 7 months, and right around election time again, this thing jumps from 36, hits a high of 45, which is a $9 move on $36 stock. That's pretty good. But anyway, she didn't stay there. She only traded in that range for about 2 months. Then she dropped down to a new trading range, 29, which is where she is today. Now she's been going sideways for quite a while at 29, and we got into Macy's way back in February. Now, we've already collected dividends on Macy's, and we are going to hold it again because we have dividends coming up again, I believe, next week or the week after. Hopefully, we'll be taking in enough, and she'll make a move back up to the area which we need her, which is 33. 33.09. But until then, we're going to hold on to it and collect another dividend from Macy's because, Macy's been around for over 100 years. I don't think they're going anywhere. Last one on this account is SKT. SKT, Tanger Factory Outlet. Never heard of them. Don't know what they do. But this is not looking good. But here we go. Started up the year at 36, goes sideways for about 2 months, jumps up to a high there at 41, travels 3 months in that area, comes back, settles into the $34 area. She was trading 34 for about 7 months, and then all of a sudden, the last 30 days, she drops down to 27. What is with that? Dropping to 27. That's crazy. All right, SKT. We're into SKT at 32.88, which is $6,700 loss on paper. When I say it's $6,700 loss on paper, because we're not going to sell, we're going to hold on and collect some more dividends. See, we collected the dividend on this a couple of weeks ago, about 2 weeks ago, yeah. And we should be collecting more dividends on this in another 90 days, unless she goes back up to 32.90, and that's quite a ways away. All right, I'll give it some time, see what it does. So let's take a look at what the seasonality looks on SKT. SKT looks as if she's going to hit a lull or a little bit of a down spout for the next 2 months, and then she'll hit the high of the year right around mid-July, which is great because right around mid-July she has another dividend coming out. So we'll be looking forward to getting that dividend, hopefully getting out by then. All right, that's this account. See if we have any questions with this account. Hopefully not. That way we can move right on to the next one. Ooh, and see what we have for questions. No questions. Great. So let's jump on to the next account. Where are we? Here we are. Now this one, you say, nice return. We're up to 48.6% for the year. We're not even halfway through the year, and we've already surpassed more than 50% of last year. Okay, we're actually in the second month of the second quarter. All right. So where are we? We only got 2 positions here. CF. Actually, we got out of CF today. Ooh, look at that. We made another 226 on CF. Now, CF was an interesting company. Let's quickly show you what they were doing for the year. Okay. CF started the year at 29. She traded a couple of months in 28, 29 area. Dropped down to 24. Traveled about 5 or 6 months at the 24 area. And right around election time, like everyone else, she starts to climb from 23 all the way up to 36. She trades at 36 for a couple of months, drops all the way back down to a new trading range of 29, and she settled in right around 27 at the moment. Now, we jumped out of 27, but before we did, we jumped into it 2 or 3 weeks ago, and we sold some options against it. Now, we made 40% in the first week and 60% in the second week of this. Third week, we ended up buying about 16 or 1,800 shares. And then we turn around, and on Monday of last week, we sold covered calls on those and raked in some more money. So this dividend play was probably one of the most profitable ones we had. And, really quick, let's check it out and see what we actually did with CF. All right, CF. Let's go by the symbol. CF is right there. Okay, year to date. All right, so it's not the total profit. I mean, we only made $881 off of CF. That's CF Industry Holdings. I'm pretty sure that's certified freight. But anyway, that's what we made. We made 226 today, and we made the rest of it last week and the week before. Okay, not bad, but still. Okay, now TJX companies. Let's go take a look at them. TJX starts the year off at 76, trades for a couple of months there, makes the high of the year right around August at 83. In the next 2 months, she drops all the way down to 71. She goes from 83 to 71, and right at election time, from 71, she jumps up to 79, trades sideways in the 77, 79 area for another 6 months, where she is now at 78. Now, we shorted this one many, many months ago, and we're trying to get out of this position. How long ago we did this? Look at February, we shorted this. So we have to buy it back at 75 if it ever hits 75 again. Never know. All right. So that's basically all the positions that we're in. Now, we got a big, fat chunk of money to spend, so let's buy some positions and see what we're looking at. Now, we got 3 days. Wednesday, Thursday, Friday. So let's see how much money we can make in the next 3 days. Now, we are looking at, today's the 8th, so we want to look at the week of the 22nd. So that's the 22nd, 23rd, 4th, 25th, 26th. And look at all these companies we have to take a look at. Let's start off with HL. HL we're going to pass on because the dividend is so small, not worth our effort. Okay, that's Hecla Mining Company. They're only paying 2/100ths of a dividend. Not worth our effort. Okay, we're gonna get out of that one. Okay. Quickly bring that up. We got AMAD EX. All right, here we go. Silver Wheaton Company, Nokia, Hershey, Harley Davidson, Expedia, and Applied Materials. Those are the companies we're looking at. All of them are viable except for Silver Wheaton, because Silver Wheaton's only paying 7 cents. And if you've been following me for a while, you know I don't like chasing anything below 10 cents because it's not really worth my while. Okay, so let's take a look at these companies and see what we're looking at. NOK is Nokia. Hershey and Harley. HSY for Hershey. Hog. Expedia and AMAT. Yeah, and AMAT. Is that right for Expedia? EXPE? EXPE. Alright. There we go. Let's decrease this a little. Alright. Okay, now Nokia missed dividends there, and there is looking at 14-day average, so we're getting rid of them right off the bat. Hershey's a tough one. Okay, Hershey trades over 1 million shares, got a 2.3 yield. The dividend is 61, and his average hold time is only 7 days. Right? She closed at 107. The high was 117. The low was 89. She's got a target for the next year of a 112, which looks pretty good. So let's quickly take a look at the 10-year chart on Hershey and find out if it's worth holding on to. Because I like to look at the 10-year chart because it gives me an idea of what it's going to look like in the next 5 or 10 years. No guarantee, mind you, but it does give me an idea of what it's done in the past 10 years. Let's see what it looks like, or the possibility of it doing this year. Now this looks like a keeper. It's 10 years ago we could have got Hershey at $50, and now it's 106. So that's more than a 100% increase. So we're going to leave Hershey there. That's a contender. Next, we're looking at Harley Davidson. Harley Davidson closed at 55. She had a high of 63, low at 41. A 1-year target of 58. The dividend's 36, which is a 2.6% yield, which everything looks happy, and everybody likes a Harley Davidson. For those of you that can afford a Harley Davidson, those of you can't, admire them from a distance. Now, Harley Davidson is not high on my list. The reason I'm saying that is the volume is not really steady. So you see a volume down here, and all of a sudden the volume doubles in 08. Okay, doubles in 08 areas. What was that? People getting out or people getting in? Don't know. Don't really care. Then all of a sudden the volume just stays the same. Now we could have bought it 10 years ago at 55 or 59. Okay, now explain to me, for those who want to buy Harley Davidson, why would you buy a stock today at 56 if you would have bought it 10 years ago at 59? That's not a wise investment, because the way it looks 10 years ago, it looks as if I hold it for another 10 years, it's going to be $50. So I'm going to say no to Harley Davidson. Sorry, Harley fans, it just doesn't work out. Now, Expedia has 7 years worth of data. She had a closing of 139, the high of 141, low of 96. There's a 1-year target of 152. The dividend is 26 cents, but it has an 8.8 yield. So I'm automatically going to get rid of that one because that ain't worth my while. Out of here. And look at this. AMAT ain't worth it either because everything looks good. However, 0.9% yield, not worth it. So let's jump into Hershey. Hershey's the only one we're going to trade for that. Okay. HSY, which is Hershey. That opens that up. HSY, see what Hershey is doing. Okay, so Hershey starts out the year right around 94. She goes sideways for a couple of weeks, actually a couple of months, spikes up to 110 and travels 2 months at 110, drops down to fill up that gap, 98, travels 3 or 4 months, and she's settling into 106 trading range where she is right now. Now, there's an awful lot of red here, but we do have the dividend coming up, and she's very good at paying her dividends. So let's take a look at what could be possible for us here on Hershey. So we like to look at the spreads, the verticals, and she's at 106 now, so we want to look at the 105, 106. And the 105, 106 is 88 cents. So that doesn't give me a lot of space to work with. Does not make me 100% happy. Okay, so it's 20%. Not even 20%. So it's cost me $900 to buy it, and the most I can make is 120. I don't know. It doesn't sound that profitable. There's an awful lot of red in this equation. You're 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 down days in the last 2 weeks. I think only 2 up days. So let's see what it looks like with the seasonality for Hershey. Okay, bring it over here for seasonality. Here's we are right now. Hershey basically going to go sideways for the next couple of days. So what do you think? Should we go for that 15% return for the next couple of days? No, why not? Let's do 20 contracts. Because Hershey It's a good company. We can always do a covered call with that next week. So let's take a quick look at what the covered call could look like. We're getting it at 106.50, 107. Yeah, that, my friends, is a good investment. Worst case scenario, I can sell the covered call and still make a nice little profit off of this one. So let's do that. All right, $1,700. We're only making 240 off of that. So that's what was that? 15, maybe 15%. All right, so 15%, not a big deal. All right, so that was that day. Next one we have to look at CCL, IP. CCL, IP, what else we got? NUS and PRGO. NUS, PRGO. So that's 4 companies for Wednesday, which is Thursday. Let's quickly take a look and see what they're looking like. Now, CCL looks good. That one looks good. Okay, so these 4 look pretty good. Let's quickly check. Oh, look at PRGO. Okay, that yield, my friend, is not nice. It's like a 0.8. Do we really want to own that? No. So let's take a look at these 3. All right, CCL looks like the average hold time was 1 day. The high of the year, the close of the year today was 62.73. The high for last year was 63. The low was 42. It's got a 1-year target of 63. Not a huge movement, but it is a 2.5% yield, and a dividend is like 35 cents. Let's quickly take a look at the chart, and then we'll go over and take a look at if it's going to be profitable or not. So the 10-year chart on Carnival Corporation. Everybody likes a cruise. Carnival Cruises, the fun ship. All right, let's take a look at the 10. Ooh, now that looks pretty. All right, so she started out 10 years ago at 47. She's at 63 today. That's a nice move. All right, I can deal with that. So Carnival makes it. IP, let's check them out. They closed at 53, or close to 53. A high of 58, low of 39. And it's got a target of 57. 46-cent dividend, which is a 3.4 yield, and 2.8 million shares. All these numbers look great. 9 days is about 2 weeks because it's 5 days in a week. Let's see what the chart looks like for this company. I don't even know who they are. International Paper. They've been around for decades. Now, that makes me a happy camper because they've been around for a long time. Now look at this. This is good. 10 years ago, it was at 38. Now she's at 52. Everything looks happy there. The volume looks great. Dividends consistent. Lovely. We like that. So let's get out of that one. We're going to do that one. IP looks good. NUS. NUS closed at 56, at a high of 66, low of 37. Got a target of 57. Not a huge movement, but it's still there. 36 cents for a dividend and a 2.6% yield. Okay, great. Happy. Let's move to the chart and see what that says. Now, New Skin. Wow, they're a network marketing company, multi-level marketing company. That's a little disconcerting, and I'd like to see a little bit more detail on that, but not necessarily so, because I really don't care what the anomaly was for that. Okay, so 10 years ago, she was at 15 or 16. Now she's at 57. That's a good investment. Even though they had this big spike here at 138, I don't know why. It could have been when they went public or when they could have done something, bought up in the company, whatever. But we're looking at 10 years ago. Like I said, she was 15, and now she's at 57, so that's good. And look at the dividends they're paying. That's great. So let's quickly take a look at. All right, so that's all 3 of those. So let's start see what they look like in trading wise. So NUS is the first one. NUS. NUS. Now let's look at the chart. See what the chart looks like. Okay, so NUS starts out the year all the way down at 38. She's She has nothing but climb to 66 over the next 6 months. That's a nice climb from 38 to 66. However, she drops back down to the 51, 52 area, and she's settling in at the $57 area. So this looks good. So let's see what we can look at for the spread and the vertical for NUS. All right, she's at 57, 35. Awesome. So we're going to buy 50 contracts here because this, I'm going to show you quickly what kind of profit we can look at, and I'm going to explain to you why we're looking at this. All right. This is going to be good. Before we do this, let's quickly take a look at the seasonality on this. Okay. NUS, here's where we are right now. Okay. It is kind of confusing, so let's highlight this area. Okay, here's where we are right now. As you can see with the crosshairs meet, it's at a low of the year right at the moment. It's got nowhere to go except for up based on the historical performance. So at 50 contracts, we're looking at more than 70% return for 3 days. Now, my friend, 70% is an awesome return for 3 days. Okay, not 70, it looks like 60. Because we're looking at paying $1,800. And the most we're going to make is $750. $750 is about 65%. That's a 65% return for 3 days. Now, why are we doing this? Let me show you real quickly. As you can see, the seasonality, the crosshairs are right here. And for the next couple of months, it's going to go up, which is great. And let's get out of here for a second. Let's go back to here. What's my chart seasonality? Go back to the standard chart. Okay, here's where we are right now. As you can see, she's in a trading range of 54 to 57. She's going sideways for the last few months. Okay. Now, several things. Software says it looks good. Seasonality says it looks good. The 10-year chart says it looks good. And if this thing stays where it is, we're making our 65%. If it goes up, we're making our 65%. She could even go down a little bit, and we're still making our 65%. Worst case scenario, we can buy this company, and then 57, and we can. Oh yes, look at that! That is a nice call to sell for a covered call. So what we're looking at getting 65 to 70% immediately, and then if we end up buying it for next week, we're still looking at carrying in some more money, and we can trade this one for 2 weeks. Good, 2 weeks on this one. All right. So NUS looks like a good one. And who's next? IP. International paper. Okay, now international paper starts the year at 42, 43, goes sideways for a couple months, jumps up to 46, goes sideways in 46 for a while, and right around election time, just like everybody else, she goes from 44 up to 52, 53, and goes sideways for quite a bit. Now she's at 52, and let's see what IP looks like. All right, there's IP. We take a look at the seasonality on IP. All right. All right, we got 3 days to go sideways. That's about it, because then she has a slight downward. So we want to make sure we can get in and get out of here quickly. So we might have to do one a little on the inside. Let's go for our vertical. 52 and a half. We're at 52 and a half, which is right there. That's 37. That's going to give us a 60%. What is this one? 40. That's going to give us 1 cent. It's not going to give us anything. Okay, so international paper. What I'm going to do, let's quickly check this and see what that looks like at 55 and a half. Okay, so single at 55 and a half. Sorry, 52 and a half. Okay, that's a nice call. So that looks going to be profitable enough for us to do that. So let's do that. Now, going to cost us 1,900. We're only making 650, which is, what is 650 off of 1,900? 35, maybe 35, 40%. Okay, I can deal with that for 3 days. Okay, let's go back. I think we have one more, which is CCL. Oh, I did Hershey. Oh yeah, I did Hershey. NUS, IP, and CCL, I believe, was the next one. Yeah, CCL. CCL. And let's do CCL right there. So we look at the chart. Let's look at the standard chart. See what that looks like. Ooh, this looks good. All right, CCL starts the year at 49, drops down to 46, trades several months at 46, and right around election time, she goes from 46 and climbs. It just keeps on climbing to where she is now at the 63 area. She got the dividend coming up in the next couple of weeks. Let's see what seasonality looks like on these guys. All right, she's basically going to go sideways for the next few months with a slight incline. So that looks good. All right, 63. 36, that looks great. All right. 9, 7, 50, 40. This is only about a 40% return. So 40% return over the next 3 days. Not bad. I can live with that. So let's do that. Let's jump back out of here. We're standing. I believe we got a few more to look at. That was all, right? We got CCL, we got IP, we got NUS. All right. All right, J&J, no-brainer. I like J&J. It's a no-brainer trade. Don't even have to do all that crap. J&J. Let's look at that. Johnson & Johnson starts out the year at 114, goes sideways for a couple of months. It's a high of 124, drops into a trading range of 113, about 4 or 5 months at 113. Then right around February, for some strange reason in February, she goes from 113 all the way up to 129 almost. Settles into the 123 area. J&J. Now what's J&J going to do for the rest of the year? Let's quickly take a look at that. Only because I don't want to get into something that's on a downward spiral. And no, look at that. She's going to go sideways for a couple of weeks and then up. So that looks like a good one. All right, so seasonality. 123. 76. Okay, that's a 25% return. So we can do 25% on Johnson & Johnson for the next 3 days. I can deal with that. Johnson & Johnson's a happy company. It's a dividend king. No-brainer. Just jump on in and do it. Now, we're doing $3,800 on Johnson & Johnson, and we're going to be making, hopefully, no guarantee on this, hopefully $1,200, which is almost 30%. So just a tad bit under 30% for the next 3 days. Okay. Johnson & Johnson. Okay, the last four we're looking at. ABX, GLW, ABX, GLW. 2 more to go. Qualcomm and Time Warner. Okay. QCOM and Time Warner TMX. Is that right? I don't think that's right. TWX. All right. TWX for Time Warner. All right. This is the last four we're going to take a look at. Qualcomm, Time Warner is a good company. And why are we missing ABX? Why is there no data on ABX? Okay. Oh, there it is right there. Okay. That's why. 3 cents? No, thank you. All right, so we have 3 to look at. GLW, Ooh, looks at 1 day. Look at all ones. This is like a no-brainer. I love all ones. That, my friends, is great. Close at 29. The high was 29. 29. That's a little tough one. The low is 18, and they have a 1-year target of 29.04. That doesn't make me a happy camper, but the 15-cent dividend, 2.1% yield. Let's take a look at the 10-year chart and see if that makes it a happy camper or not. Now, Corning. Now, how do they get GLW for Corning Incorporated? Now, Corning, we all heard of that because we all had Corningware. Now, Corning does not make me happy because 10 years ago we could have got Corning at 25, and now she's only at 29. Let's take a look at the numbers and see what they look like. We're just going to put this one on hold for a bit. Doesn't make me a happy camper. QCOM, another one close to 2 days. We're in and out. Okay, it closed at 54. The high was 71. The low was 50, and its 1-year target of 60 bucks. The dividend's 53 cents, which is a 4% yield. Ooh, I like that. Let's quickly take a look at Qualcomm and see what they're offering us for that 4%. Okay, because 4% dividend yield is not bad. Hold on to that one. Now that makes me not 100% comfortable, but not that bad. Okay, so we've got it at 43. Now she's at 55. That's what, 10, 12% return over the last 10 years, 1% a year. I don't know if I can deal with it, but look at the volume. The volume seems kind of high in the lower years, but then right about now, she's about steady volume. So Qualcomm is, we'll take a look at that one a little deeper. Time Warner, looks like hold on for a week. Had closed at 98. The high was 100. The low was 69. It's got a 1-year target of 106. Okay, they're only offering a 1.6% yield. Let's quickly take a look at the chart and see what a 1.6% yield for time, see if it's worthy of holding on to or even investing in. Time Warner, okay, this looks good. 10 years ago, we could have got Time Warner at 60. Now she's at 98. Okay, that's good. That's a 62% increase over the last few years. Okay, so we're going to take a look at those a little deeper. First one was GLW. We want to the 9th, 19th, and plot the dividend. See what she looks like. All right. Historically, this thing is going to go sideways, so we have to be out within the next couple of days. That's GLW. Qualcomm. QCOM. Let's take a quick look at QCOM and see what they look like. Another one. She's going to go sideways. Okay. And last one is Time Warner, TWX. TWX. And there we go, TWX. Another one. Now, TWX is not bad opposed to the other ones. This is going to drop a little bit, then go sideways and then up. But all three of these are sideways companies. So let's see what we can look like sideways. Right, GLW is the first one. GLW. There we go. Now, GLW starts the year off at 18. Now she does nothing but straight up for the whole year. So she settled in at 29 at the moment. She got that dividend coming in. And let's see what she looks like. GLW. And let's see what their 10-year seasonality looks like. Yep. A little hump here. And then upward and sideways for a couple of months. Alright, so let's check it out. She's at 29 right now. 39, that's going to give me what? 25% return for the next 3 days. I can deal with 25%, that's not bad. She's only going sideways though. All right, next one was QCOM. QCOM, let's see what they look like. Their seasonality looks like we got a couple of months of sideways before she hits down. Right, standard. All right, she starts off the year in 51, 52 area, goes sideways for a couple of months, jumps up to 62 side for a couple of months, jumps up to 67 for 4 or 5 months, then drops back down to 55 for a couple of months, then drops down to 55 where she is now. QCOM, let's see what they look like. She's at 55 at the moment. That looks like she could have a nice return on that one. Okay. Now this is almost 50%. Okay, so we're going to have invested $1775 into it. The most we're going to make out of this is $800, which is a little bit less than 50%. But hey, 50% for 3 days, my friends, that is a good investment. QCOM, good company. The next 10 days, you get the dividend coming up. Historically speaking, she goes up, so it's almost another no-brainer because almost everyone's heard of QCOM. All right, last one we're looking at this evening will be Time Warner, which is TWX. TWX and TWX. Okay, so TWX starts the year off at 74, goes sideways for a couple of months, and right around October, November, she jumps up and keeps on going to a trading range of 96, 97, and she's at the 98 area right at the moment. So let's take a look at the seasonality on Time Warner. Okay, Time Warner, as you see, is going to go sideways for the next couple of weeks. So let's see what we got. We're at 98, which is right here. Actually, there's no trade here. Although it looks good, she has to go up for us to make money. And if we do the 97, 98, there's no space because it's costing us 50 cents. That's all there is to it. The only way we're going to get into this one is if we come look at it tomorrow during trading hours when these numbers look a little bit normal. Negative 22, 164. Come on. We all know that ain't right. So we might want to take a look at this tomorrow during trading hours. Other than that, we are done for the evening. Let's quickly go check and see if we have any questions. And okay, we got a question right here. Is there a max yield rule? Actually, no, there's no max yield rule. If the yield goes too high, then you know that there's something ain't right. And can you do EX of 1 with a max return you're comfortable with? I think we already covered that one, so let's jump back and take a look at it again. Which one was that? All right, so let's get the monitor. All right, these are the positions that we jumped into that we're hopefully going to get into tomorrow. Because just because I put the buy order in for whatever the day, I should change those to market orders. No, I'm not going to change it to market orders because I don't want to get hit too high. Which is the highest return? I think it was this one right here. Yeah. NUS. So quickly take a look at NUS again. NUS. Let's go back to the regular chart. Okay, here's the regular chart for NUS. She starts out the year at 38. As you can see by looking at the chart, this is what a year ago, so 12 months ago today, she was at 38.86. She goes sideways for a little bit, and then right around the second week of June, she starts moving up and keeps on going up, hits a trading range of 58 here in August, trades for about a month and a half, 2 months, hits the high of the year here at the end of September, and then from there, she drops back down to a trading range of 49 and goes sideways. Jumps up in March to this new trading range of 57, where she is now. Okay, so let's jump and take a look at the trade again on NUS. NUS. Here he is. Okay. NUS, we bought this position right here. The stock is closed at 57.05. So wherever the market maker decides to open the stock tomorrow is where we're going to get in. Okay, so if it's a better trade and she opens up lower, then we'll get in lower. But at the moment, this is where she is now. Where are we? 57, which is this one right there. Okay. Now, this is what the market maker has set. The last trade was 35 cents for this trade. Now, we're buying the 56.50 and we're selling the 57. So that means the most money we can make is a difference between 56.50 and 57, which is only 50 cents. Okay, so that's the only, it's not here, 56.50 and 57. That's only a 50-cent move. That's all we are buying. That is the position we are buying. So if it closes above it, then we make money. If it closes below it, we don't make any money. But could we get in a better price than 35? Probably, if you really want to sit and watch it tomorrow morning. Now, I've told you guys a long time, I'm a lazy trader. I want to set it and forget it. I want to put the order in. I want to let the market take care of itself. And at the end of the day or during the day, I'll get a text message and find out where I was filled at. Okay, but my limit at the moment on this one is 35 cents. So let's go back at that in US right here. See, my limit is 35, but the market says the price is 32 at the moment. So if she gets filled at 32, great, because that's lower. It means I make more of a profit. So let's get back at that and see what she looks like so I can show you. Okay. Now, so if I do this trade like I did earlier, I'm not sure if you saw it, it's costing me $350. See, the buying effect for this trade is $350. Okay, the cost of the trade, including the commission, is $350 plus the $15. So that makes me in for $365 that I'm in on this trade. So it cost me $360. $365, sorry. And the most money I can make is $150. That's 10 contracts, but I'm doing 50 contracts, so let's get out of there. Let's get out of there. So let me actually show you the trade I'm actually making. All right, 50 contracts. Now, 50 contracts means I'm controlling 5,000 shares. Now, I don't mind 5,000 shares, but if I'm wrong, I have to have the money available to purchase. So I have this much money available right around, somewhere around here, around $120,000 to play with. So if I'm wrong on any one of these trades, then I have to buy the 5,000 shares. So that's why I'm only doing this. I'm not using all of my money. I'm only using a portion of it because I want to stay on the safe side, because if the stock market goes the wrong way and I actually want to buy the companies, then I have to have the cash in reserve in order to buy them. Okay, so I'm only making $750 off of this trade. Now, granted, $750 is not a lot of money to profit with, but it's only for 3 days. That's I don't know, almost $180 a day. Okay, for doing nothing. But I got a bunch of trades, so you add all the trades up together, and I'm making over $1,000. Oh, 2, 3. We'll find out on Friday. Over a couple $1,000 just for this week. Okay, so my max profit on this one trade is $750, which is close to 50% of this trade. I mean, there was a trade I made a little bit more money on this one. Anyway, but just to give you an idea, that's what we're looking at. $750, the maximum profit we can make, and the most we're going to lose is $1,800. Now, we're only going to lose if this thing goes below 56.85. Now, 56.85 is down here. So I'm going to make money if this stock goes up. I'm going to make money if this stock stays where it is. And I'm going to make money if this stock goes down even just a little bit. So you get the 10-year chart says this thing is going to go up. And it's a good deal if I end up owning it for the next 10 years. It's going to pay a good dividend. The software, all the software says it's going to go up. So why not do it? And New Skin is a very reputable company. They've been around for quite a while, and they're paying a great dividend. So do I mind owning it? No, I don't mind owning it at all. So that was a trade that I just did. And hopefully we'll get filled, and Thursday we'll be going over again to find out what we actually got filled at. But I'm not going to hit the button again because I already got on the hook for 5,000 shares. I don't need 10. Okay, so let's go and see if we have any more questions, see if I answered that. Okay, no more questions. Great. So that's going to tie us up for the day. And we are basically out of here for the evening, and we will see you guys on Thursday to take a look at where we are, and then Friday we get in at 3:30 to actually look at the exact position we are before the market closes so we can get out. This is James from the 10 Minute Trader and Dividend Stock Talk. We will see you on Thursday evening. You guys have a great evening, and I'll talk to you later.